So hello class. So we'd like to go over some questions regarding chapter 10. So the first one we'd like to start is number 2. So this basically asked you, it was fill in the blank. So it asked the gross domestic product GDP of the United States is defined as, and then you had a couple choices. So it's obviously the market value of all, and then final goods and services produced within the United States in a given time period. And then you're asked to evaluate from different scenarios if you would include it or exclude it. So how the best way to solve these kinds of questions is ask the same 3 questions every single time. Number 1, was the good produced in the United States? Number 2, was the good produced a final good? So was it a intermediate good or a final good? And third one, was the good produced within a time period given, within the time period given? So in our case, it's 2018. So number 1, Chocolate Express, a Swiss chocolate company, produces a chocolate bar at a plant in Illinois. On December 9th, 2018, an elementary school student buys the chocolate bar on December 21st. So the first question, was the good produced within the United States? That it's a Swiss chocolate company, doesn't matter. Was it produced in the United States? Yes. All right. Number 2, was the good produced a final good? Chocolate bar is a final good. Check mark. Was the good produced within the given time period? December 24th, 2018. Yes. December 9th. So it's included. Next question. Atletico is a US shoe company. Again, that doesn't matter. Produces a pair of sneakers at a plant in Vietnam. I can stop reading. It's produced at a plant in Vietnam. Just in case, on March 27, 2018, imports the sneakers. No, not included. Third one, Tree Topplers, a US lumber company, produces the wood at a plant in Oregon on September 25th, 2018. So it says 25 September 2018 in the time period, and it's produced within the United States. So we have one last question. Is it a final good? Let's read further. It sells the wood to build it and partners a developer for use of the production of a new house that will be built in the United States in 2018. What does that tell you? The wood is used to produce a house. The wood is obviously not a final good, so it's gonna it's gonna be excluded because of this. Let's continue. Tasty is a US fast food company, produces a hamburger at one of its many St. Louis locations on January 14th, 2018. It sells the hamburger to a customer the same day. Produced within the United States in St. Louis, so check mark, and 2018. So it's included. There's no reason for it not to be included. Last one. An accountant starts a client's 2018 tax return on April 14, 2019, finishing it just before midnight, April 15, 2019. You guys see, different year. It's excluded because we were asked about the 2018 GDP.
All right, so I'll talk a little bit about questions 3 and 6. So in these ones, you're going back to that equation of GDP, which is all of the consumption, investment, government purchases, exports, and imports. So one way I guess we can think about this is, let's recall consumption consists of expenditures by individuals on goods and services. So any good or service that is bought in a country would go into the consumption component of GDP. Investment consists of all of the expenditure on capital goods, so goods used to produce. Government purchases consist of any purchase by state, local, or federal government. And exports are when it's produced in said country and set out to another country, where imports are if it's produced in another country and then imported into said country. So for this one, we have Na's father in Sweden orders a bottle of Vermont maple syrup from the producer's website. Given that we're looking at the US GDP, this would be an export because we're seeing that the maple syrup bottle is being exported to another country. So that would be included in the export component of the US GDP. Neha gets a new video camera made in the United States, just a camera that's made in the United States. So that's just solely included in consumption. Lorenzo's employer upgrades all of its computers. Now, this would be an investment because the computers are considered capital stock. They're used to, I guess, in some form of the production of the company. So upgrading them would be considered an investment component. Neha buys a new BMW, which was assembled in Germany. So this would be considered a part of consumption because an individual is purchasing a good, but at the same time, it would also be considered an import because it was imported from, another country into the United States. So they would counterbalance each other. And the last one, Federal Aviation Administration expands the runways at Philadelphia International Airport, which is just a few miles from Lorenzo and Nea's house. This would just be considered government spending because the government is expanding runways and using government purchases to do that. And so the last one, there's one more if you just go down. We'll upload those with the answers. So, although GDP is a good way to measure a nation's output, and in some ways, people argue the quality of life, it does have its limitations, and there are some things that are a little bit hard to quantify that determine the quality of life of a country or of an area. So if we're looking at these, we know that expenditures on federal highways are considered part of GDP because that's a part of government purchases. But for instance, doing your own laundry, that would be considered home production. And there's no way to really calculate that in a very efficient way, or it's a little bit difficult to measure. It doesn't consider the enjoyment of household experiences as a result of the variety of goods available to consumers. So variety of goods, that's not necessarily included in GDP. And also doesn't take into account costs of overfishing in this case, or other overly intensive uses of resources. So it does have some limitations. I would say for ones like those, just go back to, the original ones that Alex talked about. Is it a final good? Was it produced in the country? So domestic, like home production, is not always accounted in. It's not very easily accounted in GDP. So that's why GDP does have some limitations, or like, household experiences, household production isn't accounted in GDP. So yeah, so I would keep that in mind. Now, this one, when a U.S. company purchases and imports wood from Brazil to use to build new houses within the U.S., this purchase increases the investment in the U.S. Component of GDP because the company is buying some sort of good some sort of capital goods, expenditure on capital goods for the use of production. But at the same time, it's going to decrease the net exports because it's an import going in, like from Brazil going into the U.S. So that would be associated with a negative number. Remember, exports minus imports equals basically the trade balance. And therefore, the purchase of the wood, because the investment would be the positive number. Say if this wood was like $4,000, that would be considered the positive. But then also because it's imported, it would be minus a negative 4,000. So if you add those two together, you get zero. So there's no overall change in the US GDP. And yeah, so those are the questions for homework number 10. And I hope that that was useful to you guys. And Alex, I guess if you have anything else to add.
No, that was about it. Homework 10 was very short, so I hope you guys did well on the exam, and we could help you with some of your concerns.
Thank you.